This is CGTN, China Global Television Network.
Hello and welcome to Global Business Africa. We're coming to live from Nairobi. I'm Hannah Viviers. Let's take a look at what happened on the markets today. A lot of news coming out of South Africa. What's been drawing headline attention have been those protests against the jailing of South Africa's former President Jacob Zuma. We'll have some more analysis on that story later on in the program. Looking at how South Africa's all-share index did today. Earlier in the day, the markets did seem to be weighed down by that unrest. Financials were in the doldrums. Standard Bank, Capitec, Absa, and First Rand among those that took hits. Major retailers such as Massmart, Woolies, and Mr. Price did not go unscathed. However, by the JSE's close, the bourse had managed to claw its way out of negative territory, closing a little bit higher. Over in Nigeria, Nigeria's all-share was down almost 0.4%. That was a quick look at the markets. Now let's take a look at what else is making headlines. Russia now lifts the 5-year flight embargo to Egyptian resort cities. The DR Congo inches closer to becoming a full member of the East African Community Bloc. And G20 ministers approve deal to tax multinational firms. Let's begin in Egypt, which has welcomed Russia's decision to lift the ban on charter flights to and from the North African nation following a presidential decree issued by the Kremlin. The ban was applied in 2015 after the crash of a Russian passenger plane in Sharm el-Sheikh, killing all on board, and was to be presumed to be an act of terrorism. With the details, here's CGTN's Yasser Kim.
Egypt is bracing for the influx of Russian travelers. Russia had continuously postponed the return of its tourists to the North African nation since its passenger jet crash over Sinai in 2015. Egyptian authorities have been working hard on improving security measures since that fateful day.
Egypt had to meet a lot of requirements, so it firstly started from this national security of Egypt, and besides as well like protecting all the tourists worldwide coming to Egypt. So the government had to escalate it up and to upgrade all their security infrastructure across all the aircrafts, and as well on the at each of the port or each of the airports, dealing with all the nationalities. There was involvement from different institutions in a global wise, ensuring that all the standard up to the most according to all the different benchmarks from international airport has been met in order to ensure the safest and the most efficient security systems are in place within the Egyptian government.
Before the flight ban in 2015, more than 3 million Russians visited Egypt per year, the highest of any nationality. Goldman Sachs estimates Russian tourism could pump $3 billion of badly needed hard currency into the economy. That's nearly as much as total tourism revenue for 2020. The tourism industry has always been a top hard currency earner for the state budget and employs millions of people. That's why the North African country had to seek alternatives during the absence of foreign visitors to keep the sector afloat.
This was Egypt's strategy since 2015. They tried to firstly to meet the requirement of the Russian government, and besides as well to try to open different source market, of which Egypt has started like approaching like the different Western countries of Europe. Indeed, as well, we started like focusing a lot on the Arab countries and the neighbor countries, and encouraging the Arabian, which started to represent around 30%, between 25 to 30% from the total arrivals are coming from the Arab region. And in addition, after COVID-19, there was different strategies starting from the staycations or promoting Egypt for the Egyptians, creating new different type of products as well, creating and opening new destinations.
The government is forecasting 1 million Russian visitors before the end of the year, pushing tourism revenue up to $9 billion from $4 billion in 2020. Yes, Hakim for CGTN, Cairo.
Well, to South Africa now, where soldiers have been deployed to help quell violence that erupted after former President Jacob Zuma's jailing over the weekend. Unrest by pro-Zuma protesters in his home province of KwaZulu-Natal and Gauteng broke out, leaving at least 6 people dead. According to the military, disturbances have since worsened Opportunistic criminals appear to be taking advantage of the anger some feel over Zuma's incarceration by stealing and destroying property. Police say about 219 arrests have been made so far. President Cyril Ramaphosa has condemned the violence, saying it is damaging efforts to rebuild the economy after the COVID-19 pandemic.
While there are those who may be hurt and angry at this moment, there can never be any justification whatsoever for anybody to embark on violent and destructive and disruptive actions that negatively affect the rights of others. Let us be clear, as a nation, that we will not tolerate any acts of criminality. We will not tolerate any acts of vandalism. Those who are involved in acts of violence will be arrested and prosecuted.
Or earlier, we had mentioned that we would have more analysis around those pro-Zuma protests currently in South Africa to give us a clearer on-the-ground depiction of how this could be impacting the country's economy. We're now joined by Langa Madonko, who is co-founder of investment manager firm Summit Africa. Thank you so much for joining us, Langa. Langa, what has the reaction to these protests been from the business sector?
Yeah, I think from the business perspective, there's an element of worry around some of the looting and the insurrection and the damage of property. There's also a worry about how long these protests will go on and how much further damage will be done to businesses, and also what the fallout will look like post the coming down of the people in light of these protests and riots that have taken place. We are yet still to count the cost of what it will mean for the economy, particularly considering how South Africa already has its own crisis in terms of unemployment and lack of opportunities, and this has further exacerbated that.
Langa, there had been some calling the sentencing of Zuma a triumph for law in the country, and that it had strong potential to encourage investors. What do you think investors are making of these violent protests now?
Yeah, I think there definitely was a positive sentiment that came out in terms of, is South Africa a place where there's the maintenance of the rule of law? There was positive sentiment to say this is protection of the Constitution. But I think this may have set it back, because I think it does prove that, for lack of a better term, in the underbelly of the South African system, there are underlying tensions. And I don't think this is merely linked to the arrest of Zuma. There are some social issues that are coming to the fore. Some of the protesters have commented that this is for them about issues of hunger, about issues of unemployment, and about issues of the lockdown, and how that is continuing to impact them and their livelihoods. And those are definitely not going to be positive sentiment, because security of tenure, security of property are big issues for investors making investments into the country.
Very huge issues that you highlight there, Langa. But say now the Constitutional Court does review Zuma's sentence, and it say that that was going to start happening from today and go on to be a lot much easier on him with regards to his sentence due to his protests. What message do you think that would send to South Africa as a whole and the business sector, both locally and internationally?
Yeah, so I think one of the things that one has to consider is that the current judgment that was made against the former president relates particularly to his contempt of court, in terms of him not appearing at the competition, at the commission, the Zondo Commission, which is looking into the issues of state capture in South Africa. And it is not necessarily something that deals with many of the other allegations that may have been made with regards to corruption and so forth and so on. So in the instance, there are advocates of both sides who have spoken to why there is a need to be lenient, and others who have said there's a need for them to maintain the sentence where it is. And I think from an investor perspective, one has to be looking at what the arguments and what the rationales are in both instances. If it is merely the pressure coming from the streets and a failure from the authorities to deal with the riots that leads to him being released, then we do have a constitutional and social crisis. But if it is based on arguments that are put forward in court, if it is based on the arguments that were put forward today in his appeal for the rescission of sentence, then that's a different place, because it shows that we have a healthy and alive constitution and justice system.
Langa, few people would argue against peaceful protests. We see them in various parts of the world. It's when they turn violent that there is concern, and more so for South Africa, which already battles with high violence. You'd spoken about some social ills that already exist and are coming to the fore because of these protests now that we're seeing. What does the business sector want to see with regard to overall violence in South Africa and how it's tackled in the country?
So I think zoning in specifically on this present instance, I think the first thing that everybody wants to see is a situation whereby the government acts decisively, the authorities bring a quick end to this. And then it's also about how do we go forward in terms of working in the South African context to deal with the numerous social ills. Because I think in as much as we've had these protests and we have said they are linked to the incarceration of the former president, like I'm saying, the theme is coming across that there are numerous other issues that are embedded into this. And in South Africa, it has been a trend that in many instances when there's a protest, it can turn violent. And that volatility that is sitting underneath the belly of the South African situation is what needs to be dealt with. I think there are issues of social cohesion here, there are issues of unemployment, there are issues of lack of opportunities, and there are issues of the impact that COVID has had, which has further exacerbated the situation. And I think it's a much, much broader conversation that needs to be had. And that conversation also needs to be had, remembering that we need to speak to our investors about how we're looking to resolve all the issues that we're currently dealing with.
Langa, so good speaking with you. Thank you so much for all your insight. Langa Madonko, he is co-founder of investment manager firm Summit Africa. Well, let's head over to another economic giant on the continent. The Nigerian government is projecting a budget size of $34 billion for 2022 finance budget. And National Planning Minister Zainab Ahmed disclosed this after the cabinet approved the 2022 to 2024 medium-term expenditure framework and the fiscal strategy paper, which will underpin the country's budget for 2022 through to 2024. CGTN's Deji Badmos has more on that story from Lagos.
At $34 billion, the projected 2022 budget is 3% higher than the current budget. Also higher is the projected budget deficit, which is estimated at $13.7 billion, slightly above the threshold of 3% specified in the country's Fiscal Responsibility Act, FRA.
The FRA empowers Mr. President to exceed the threshold if, in his opinion, the nation faces national security threats, and it is our opinion and FEC agreed that we can exceed it.
Nigeria has been borrowing massively to fund its budget deficit for some years now. The government says it will still engage in new borrowings to finance the 2022 budget deficit.
The deficit is going to be financed by new foreign borrowing and domestic borrowing, both domestic and foreign, in the sum of 4.89 trillion, and privatization proceeds of 90.73 billion, and drawdowns from existing project-tied loans of 635 billion.
Nigeria's debt level has been a big talking point in the country, partly because of the huge chunk of money spent on servicing the debts. Many have also raised concerns about the country's debt-to-revenue ratio, which has been quite high.
I just want to state that the projected debt-to-revenue ratio in the report is 43%, which, of course, we know Nigerians all have concerns about. But the actual debt-to-revenue ratio in 2019 was 58%, so this is an improvement over the preceding year, over 2019. In 2020, the ratio was up to 85%. So 2022 is a significant improvement on 2020.
The pressure of the conversation here is not so much around budget deficit as we think of it. Many countries in the world, especially in view of global recovery, would to a large extent borrow more money, to a large extent run into budget deficits. All right, but what would set country A apart from country B would be what exactly are you investing those monies on?
Other key macro assumptions of the 2022 budget include crude oil benchmark price of $57 per barrel, crude oil production of 1.88 million barrels per day, inflation rate of 13%, exchange rate of 410 to the dollar, and a GDP growth rate of 4.20%. Some analysts, though, think some of the assumptions are not realistic.
Take, for instance, the exchange rate at 410. That's the official rate. All right. We all know to a large extent, very few businesses do engage or transact, if at all, the official rate. The fact that we're not being realistic on the nature of some other parameters would always affect the quality of our fiscal planning and the quality of our fiscal framework and dynamics around executing the fiscal policy in the sense.
The president has since sent the medium-term expenditure framework and fiscal strategy paper to Parliament for consideration and passage. After lawmakers pass the documents, the 2022 budget will then be formally drafted and presented to the Parliament for vetting and approval. Deji Badmos, CGTN, Lagos, Nigeria.
Let's now zone into East Africa's largest economy. Kenya has been ranked as a top country in the world in reducing the number of people in the country with no access to electricity. The Energy Progress Report for 2021, a product of a partnership between the World Bank and bodies such as the International Energy Agency, says that Kenya's electrification pace is now ahead of population growth. Kenya's annualized increase in electricity access between 2010 and 2019 was at 5.6%, the largest among the top 20 countries in the world with the biggest electricity access gap. Kenya's growth dwarfed the world's average growth of 0.8%, with the closest countries being Bangladesh at 4.1%, Uganda at 3.2%, Tanzania 2.5%, and India at 2.4%. Myanmar and the Democratic People's Republic of Korea with 2.2%. Let's now take a look at corporate news making headlines. South Africa's MultiChoice is facing shutdown in Nigeria. That's after the country's tax authority asked lenders to freeze the group's local bank accounts to recover $4.4 billion in alleged tax arrears. MultiChoice is accused of denying Nigeria's Federal Inland Revenue Service access to its records. The pay TV operator has denied the accusation. Its shares fell by as much as 7.4% at close in Johannesburg, the lowest since March 2020. Kenya is now the largest shareholder in Pan-African affordable housing firm Shelter Afrique after paying $10 million in additional capital. This new investment raises Kenya's shareholding in the Nairobi-based entity to 18.7%, beating stakes by Nigeria and the African Development Bank at 13.7% and 13.3% respectively. 7 other countries have also given the firm additional capital, bringing the fresh capital received in the last 6 months to about $18 million. Egypt's second largest bank, Bank Misr, says it has applied formally for a license to enter the Kenyan market. That's as it seeks lending deals in East Africa and serving Egyptian firms operating in the region. The state-run bank hinted its plans to enter Kenya last year. It says the license applications to Kenyan regulators were made alongside similar applications in Somalia and Djibouti. And finally, a group of leading travel businesses, including Ryanair, BA, Travel Business, TUI, and Manchester Airports Group, have launched legal action against the UK government over COVID-19 travel curbs. Currently, the UK government has implemented a traffic light system that classifies countries as low, medium, or high risk. These travel firms, however, claim that the system lacks transparency. And those were the company news making headlines. Let's now take a look at Let's now take a short break and return. More news, including the DR Congo inches closer to becoming a full member of the East African Community Bloc. And South Africa's power utility Eskom seeks $10 billion to fund its transition to renewable energy production.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Welcome back. Well, the Democratic Republic of Congo has moved closer to joining the East African community after an assessment by a verification team. The team spent 8 days in the eastern DRC city of Goma and is expected to write a report about their findings on the DRC's suitability for admission into the regional bloc. CGTN's Chris Mringa has more from DRC's capital, Kinshasa.
The East African Community's verification mission to the DRC was led by the Regional Bloc's Secretary General, Dr. Peter Mathuki. The team concluded its assessment of the DRC joining the community on July 4th and was tasked with establishing whether the DRC conforms with the criteria of admission of foreign countries to the community. Under the East African Community Treaty, all countries seeking to join the bloc must follow practices of good governance, the rule of law, democracy, and human rights. The DRC President, Felix Tshisekedi, hailed the progress made by the community in integrating his country. The verification mission is expected to write a report about its findings and submit it to the community's Council of Ministers. That report will then be given to the heads of state of the East African Community for a final decision on the DRC's admission to the regional bloc. If approved, the DRC will become the 7th member of the bloc. The other member states are Tanzania, Kenya, Uganda, Rwanda, Burundi, and South Sudan. The DRC's entry into the community will ease trade with those countries and enable its citizens to move freely without requiring visas. Chris Mringa, CGTN, Kinshasa, Democratic Republic of Congo.
Prime office rentals declined by 11%, while residential rents declined by 19% on average in the year to December 2020 in most prominent African cities due to the current economic downturn occasioned by the COVID-19 pandemic. Knight Frank's inaugural Africa office market dashboard for the first quarter of 2021 shows that Dar es Salaam and Tunis recorded the highest declines in prime residential rents, recording drops of 33% and 34% respectively. On average in 2020 and compared with 2019, prime office and residential rental yields in Nairobi declined by 3.9% last year. Kampala, however, is expected to record a rise in occupier activity due to the recent signing of the East African crude oil pipeline project, which could drive up demand. In Southern Africa, currency fluctuations, a political climate in Lusaka, and a supply glut in Johannesburg and Cape Town were some of the issues affecting rental yields. Well, real estate and construction often take major knocks during economic slumps. Both are strong indicators for the health of economies, as economic recovery remains a top priority for many countries around the world. This time, countries in Africa are no different. Construction, particularly of infrastructure, is key for the continent's development. Here to speak to us about activity and investment in the sector is Gregory Pearson. He's CEO and co-founder of private real estate development company Gateway Real Estate Africa. Thank you so much for joining us, Greg. I just want to start, Greg, with just value that you are seeing here on the continent. Despite the economic challenges during this time, what kind of real estate development value do you see here in Africa?
Hannah, thank you very much for the time. The value that we see is due to the downturn in markets and global companies keeping cash reserves. It gives us the opportunity to focus on real estate and let them focus on their core business. So a lot of the multinationals that historically have operated across our continent, being Africa, what we're seeing at the moment is they still require their real estate needs and their growth across the continent. But what this has allowed us to do is focus on their real estate and provide them with the real estate needs. And with that has increased the real estate development that we've offered across Africa and more specifically in Kenya.
Greg, the trend is usually to move away from emerging markets when we see times like this, what we're seeing now with the global downturn. How have you been able to still attract investment into the projects that you have here on the continent?
That is always an interesting topic because as soon as we see a downturn, as you mentioned, the international investment dries up in Africa. And what we did is when we established our business, we understand that there's always ebbs and flows across our continent. And we set up an evergreen vehicle and raised the capital up front. So what this allows us to do is take advantage of situations like this, where we've got global companies looking for bespoke real estate solutions. We've still got the firepower that we can act accordingly and carry out the developments that they require, even though we're in a downturn market. What that allows us to do is create that infrastructure, build the real estate that is required, and then take advantage of that in the upturn as well when the market becomes more buoyant. And I think that is a solution that is often driven across Africa, is that there's these cycles that we need to follow. We are in a global crisis at the moment, and having the firepower and the finance behind us at the moment has allowed us to move quite quickly forward and provide those solutions required.
So Greg, some of the numbers that are coming out of your company are quite impressive, and some of these numbers actually made my eyes water when it just came to the volume of what you're doing here on the continent. We're told that your company was founded in 2018, but already has almost $4 billion worth of projects in Africa. What do you attribute your company's growth to? And it's been quite rapid growth that you've experienced.
Our main focus is relationships and understanding what our clients' requirements are. We're not a typical real estate developer that goes into a new country, arrogantly builds a development and hope people will come. What we do is we try and partner in the countries that we're operating in, and then from there understand the culture of the country and understand the relationship that we have with our global partners, and create a solution that will suit the country that we're investing in, as well as global best practice for our requirements of our global tenants moving into the continent. And, I think we've been going about this business for a long time, and relationship is key. Understanding, the different tax structures and central bank regulations of those countries, and then working in collaboration with partners. The bigger we can grow a real estate platform in Africa will invite more investors into our continent. So our business is more about collaboration and creating platforms for international investment, and actually proving to the rest of the world that Africa has got great platforms and good returns across the continent if it's done correctly.
So Greg, talking about that collaboration, I want to talk a little bit about, sounds more like, I think this would be more one of your CSI projects that you've got involved in, your company deciding to get involved in the Build Her project here in Kenya. Speak to us about why you chose this project and just your involvement with the Build Her project.
Sure. Women in construction has always been something that we've driven hard. In this particular project, through from our exco, we've got women that sit on our board, through to our executive committee, through down to our project team. And what we wanted to do is illustrate that women in construction is something of the now. Construction was always viewed as a male-dominated industry. And the project that we're completing in Kenya at the moment, the management of this construction project is 100% driven by women. And we just think that if we can put this as a showcase forward we're leading by example, and it will be something that the rest of the world can take a look at to say Africa has delivered a project run and managed by women, which I think is a fantastic achievement to showcase what Africa can do if the right processes are put in place. And specifically with this foundation that we're working with, Earn and Learn. So, we've got 30 women that we've taken on board that run through a number of opportunities and understanding how construction works through from, the infrastructure all the way through to completion. And at the end of that, they come out with a qualification so they can take that and better themselves and move on to other construction sites, which I think is a phenomenal program.
Thank you so much for all that, Greg, and best wishes with all your projects here on the continent. That was Greg Pearson. He's the CEO and co-founder of private real estate development company Gateway Real Estate Africa. Let's head over to South Africa now, where the country's national power utility, Eskom, has put forward a $10 billion plan to multilateral banks and agencies to help it move to renewables. The development is significant as the utility generates more than 90% of South Africa's electricity using coal. CGTN's Angela Coppola brings us that story.
Eskom has decided to make the transition as it hasn't been able to maintain the existing coal plants as well as complete new projects on time.
As we shut down our power plants, where are the opportunities and what are the opportunities to repower them with renewables, to repurpose them? But we're also looking at accelerating the renewables plan, looking at alternative options for energy security, for microgrids, for grid strengthening.
Climate change activists have been pushing the utility to move to sustainable energy sources to power the country's electricity grid.
If you look at a lot of the economic modeling and the systems analysis around what the best, most affordable, most job creating and reliable energy system is, it's a renewable energy future, one that's predominantly renewable, solar and wind with battery storage and the likes.
Not everyone agrees that renewables are the solution, specifically when it comes to dispatchable or baseload electricity.
Unless you've got a very large energy storage system, which hasn't been made to work commercially yet at the level we're looking at, or you've got some kind of backup power, renewables won't meet your need. If you just had PV, for example, PV can't meet the evening peak because the sun's not shining.
This isn't stopping Eskom from working with renewables in the short term as the coal-fired power stations reach their end of life. Finding the funding for the transition is a key focus.
The terms that we've been discussing with a lot of these financiers as well is very, very concessional, highly concessional loans, long payback periods, payment holidays, low interest rates. So that's what we're looking at. And on the side, in parallel, we're looking at the strategy to resolve the debt issues.
Eskom says it's got a plan to move from coal-fired power stations to renewable energy. The question now is how quickly it can do it and who's going to pay for it. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
The COVID-19 outbreak has affected every sector across the globe, and the hotel industry is among the hardest hit. In a bid to remain in operation amid a slump in guest bookings, some hotels in Kenya have had to incorporate new strategies, as CGTN's Nick Mudumba now reports.
As hotels around the world had to take a break from the COVID-19 pandemic due to profitability issues, Diamond Dreams Hotel was among the hotels in Kenya that stood strong. Business management, strategy and creative ways of holding on to clients was one of the principles that kept the hotel afloat.
Whatever happens, whether it's a pandemic, whether it's terrorism, whether it's political unrest, whether it's war, tourism industry is always affected first, I believe. So in Kenya, it's been very hard, but being in Kenya for the last 10 or 15 years, we roll through cycles in tourism of having issues when it comes to people coming through into this country. So Kenyan tourism is a very resilient and strong tourism industry. We've invested a lot of money into this property over the past 5 years, where we built a state-of-the-art conference center, we've redone the rooms, we've invested in personnel, upgrading our food product and all these type of things.
Different consumers with different tastes was the target for the hotel. It has customized everything for affordability purposes, which keeps it running. The hotel has also been given the GBSC Staff Facility accreditation reserved for facilities that demonstrate superior ability to prepare for, respond to, and recover from biorisk and infectious disease situation, which with the current pandemic is a blueprint for the hotel. But for them, there's something for everyone.
We have luxury brands, which is the Diamond brands, which is the top of the end luxury. And we also have Sandy's brands, which is family, friends and fun. So think about it, if you want to go with your kids and you want to have a good time, we have different products for every different range. We have the Mvua Spa range as well, which is some of the top spas in the world. If anybody wants to enjoy the best kind of spa services that you can offer, as well as we have the top line chefs. I mean, everything is very, very well organized and very, very well run. And, you know, we have a very good name in the market, a very good reputation, and it's something that puts us out of the norm.
Investing in human capital has been difficult in many hospitality sectors, but according to the hotel's management, this is one of the key areas even when the COVID-19 pandemic hit.
This is about personalized service, about trying to keep every single guest with a very great experience that you have here. I mean, the product is beautiful, which is very easy. You can have a beautiful product, but it's really investing in our staff, investing in our people and looking after our people, which is our staff, and keeping them as motivated as possible to give a little bit extra to our guests.
Even as organizations focus on the immediate business shocks, planning for the post-crisis world is now an essential. Nick Mudimba, CGTN.
More news making headlines after the short break, including G20 ministers approve deal to tax multinational firms, and Chinese chip firms ramp up production amid global shortage.
It's just taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Business in Africa is at the crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
And now for a recap of our top stories in South Africa. Soldiers have been deployed to stop violence that erupted following former President Jacob Zuma's jailing. Over the weekend, unrest by pro-Zuma protesters in his home province of KwaZulu-Natal and Gauteng broke out, leaving at least 6 people dead. According to the military, disturbances have since worsened. Opportunistic criminals appear to be taking advantage of the anger some feel over Zuma's incarceration by stealing and destroying property. A global vaccine program has signed deals with 2 Chinese drug makers. The Global Alliance for Vaccines and Immunization said on Monday that it had reached advanced purchase agreements with Sinopharm and Sinovac. They'll immediately begin making 100 million doses available to COVAX. The program run by the World Health Organization has struggled to get vaccines to poorer countries, but is now on track to deliver 2 billion doses by early next year. And that finally, thousands of people are protesting in Cuba in the country's biggest demonstrations in decades. People rallied in towns and cities across the country, including Havana, demanding President Miguel Diaz-Canel step down. They're angry over shortages of food and medicine made worse by the pandemic, which has cut off crucial tourism dollars. Cuba's economy shrank by 11% last year. The government blames the country's long-standing economic problems on the American trade embargo. And that was a recap of our top stories. Finance ministers of the G20 large economies have endorsed an historic global deal to tax multinational companies more fairly. A framework for international tax reform, including a minimum corporate rate of 15%, was agreed this month by 131 countries. But as Toby Muse now reports, the endorsement by the 19 biggest economies plus the EU will help ensure it becomes a reality following years of negotiations.
It's the biggest shake-up of the international tax system in decades that could see tax havens shut down, set a minimum international corporate tax rate, and ensure that global businesses pay more taxes. 130 countries signed on to a breakthrough blueprint outline of a deal earlier this month. All the G20 finance ministers meeting in Venice this weekend support the deal, including representatives from China, the US, and EU nations.
Many colleagues define it a historic agreement on a more stable and fairer international tax architecture. We endorsed the key components of the 2 pillars on the allocation of taxing rights on profits of multinational enterprises and the global minimum effective corporate taxes.
The deal would see a minimum international corporate tax rate of 15%. Another point would see huge companies like Google and Amazon pay taxes wherever their goods and services are sold, even if the corporations don't have physical presences in those countries. Various ministers hailed the proposed changes as a benefit for the world and individual countries.
This agreement ensures that our tax system is fit for the digital age and, crucially, that the right companies pay the right tax in the right places. Since that G7 meeting in London, now 130 other countries have also joined the proposals, and we now need to work on finalising the details before our October meetings so that we can indeed bring fairness to the global tax system and, crucially, ensure a good deal for British taxpayers.
Supporters say the deal meant to end the so-called race to the bottom by countries competing with each other to slash taxes in order to attract companies. It also aims to stop huge companies from holding their earnings in low-tax countries. A few countries refused to commit to the deal, saying it would remove their tools to attract investment and infringed on their sovereignty. It's been reported the opposition comes from 9 countries in all, including Ireland, Hungary, Barbados, and Kenya. The new plan is a reversal of the model many countries have followed in recent decades, offering low taxes to attract companies and so encourage growth. Many of the countries are conscious of the need for more stable revenue sources, following a grim 18 months of the global pandemic that worldwide has cost trillions in public spending.
Work on the critical details will continue with the expectation that national leaders will approve a final version in October at the G20 summit in Rome. Toby Muse reporting for CGTN, Washington.
China's Commerce Ministry says it will encourage different approaches to conduct foreign trade. The ministry says the move follows the State Council guidelines issued on Friday. Feng Yilei has the details.
China will have better policies in place for the various foreign trade approaches by 2025. New steps will enhance the global edge of leading enterprises and industrial clusters in the country. Developments aim to make China a global leader in innovation. Plan will help sustain double-digit growth in China's foreign trade this year. Officials say new forms and models of foreign trade will play an important role in China's future development pattern. And these models have already become a driving force for the transformation of trade and high-quality development. As a next step, the Ministry of Commerce say they will launch concrete action plans for relevant sectors. The government says it will improve cross-border e-commerce by providing supportive policies and promoting integrated pilot zones.
一是研究制定跨境电商知识产权保护指南。
We will expand integrated pilot zones for cross-border e-commerce and carry out assessments for that this year. The Ministry of Commerce and other departments will formulate guidelines for cross-border e-commerce and intellectual property protection and optimize the list of goods for retail imports. We will also improve procedures for returning goods. We need to support institutions of higher learning, research institutes, enterprises and industrial parks both in China and Switzerland so they can build green technology innovation platforms. We also need to focus on innovation and research in green technology, technology transfer, and practical applications.
Authorities will also encourage the setting up of warehouses in overseas destinations to help more Chinese companies tap international markets.
We will encourage traditional foreign trade companies, cross-border e-commerce platforms, and logistics firms to participate in the development of overseas warehouses. We will encourage more overseas warehouses that are digitized and standardized to further deepen international cooperation.
Other measures are aimed at increasing the procurement of raw materials and increasing offshore trade. Efficiency of integrated foreign trade service firms will be enhanced, along with export tax rebates and logistics efforts. Officials say the measures focus on alleviating the industry pain points and addressing the developmental challenges. Feng Yilei, CGTN, Beijing.
Well, chips are high on the agenda at this year's World Artificial Intelligence Conference. With global shortages, many domestic firms in China are ramping up efforts to promote research and development. CGTN's Gao Ang visited a Chinese chip firm in Shanghai and filed this report.
Shenglu founded a semiconductor firm Coragen 6 years ago, and research centers have since spread across the world. One of its major products is a smart network interface card, which helps connect servers to the internet. Lu says the card helps offload processing tasks from these servers. This smart network interface card is a core and necessary part of building a data center and cloud system. Right now, over 90% of the Chinese companies using such card rely on foreign technology. But this one is self-developed and has almost the same function. In the face of global chip shortage, Lu says the situation presents both challenges and opportunities.
So we actually gonna, instead of slow down, we actually gonna double down our investment that heavily, not only in R&D, but in the sales and marketing, and to branch new market segment, the market shares, as well as the new market products. So we think this is an opportunity.
Due to COVID-19 and disruptions to global supply chains, the global chip shortage has taken a toll on various industries, especially automobiles.
And I really think this sort of shortage is always a cycle, right? It comes up, it will go down. So, when we go down, and I think I hope we'll be ready when we're back to normal, then we're not only ready to ramp up our volume, but be ready to ramp up a new products.
Chip firms have been showcasing their products at this year's World AI Conference, including SemiDrive, which focuses on the needs of the automobile industry. The firm's chairman says it hasn't been affected too much by the global chip shortages, since they'd already pre-ordered a supply of chips in April last year.
The chip industry is not a simple process of buying and selling, like our core chip, which needs long-term design. Sometimes it takes months or even more than a year to design, install, and experiment before mass production.
Zhang also stressed the importance of forecasts about car manufacturers' production plans as well as the state of consumption.
We will continue to launch new products next year to cover a variety of needs for the automobile industry. The products will provide higher functional safety levels and a better performance.
Some experts and industry professionals have predicted that chip shortages may last into the first quarter of next year. But they also say it's worth watching how the crisis could bring about more opportunities. Gang, CGTN, Shanghai.
Let's go back to the markets on the commodities front. Even the prospect of tightening oil supply didn't do much to oil prices and trade today. The concern around global growth continues to dampen oil prices. Brent was down almost 8%. On the international front, the stock market was optimistic about major U.S. companies' earnings, which we'll begin to see from tomorrow. That return of confidence could have been why we saw gold lose over 0.1%. It could signal momentum toward other asset classes besides safe havens such as gold. Let's now take a short break and return. More news, including farmers in Cameroon race to tap into the rapidly expanding fish trade. Well, spicy grilled fish served whole is one of Cameroon's de facto national dishes, but around half of some 500,000 tons of fish consumed per year is bought from abroad, while the rest is almost all wild caught. Boris Kamgo is part of a government-backed aquaculture movement seeking to grab a larger share of the ever-growing market for fish in the nation of over 20 million people.
Boris Kamgo scatters food into the netted enclosures of his fish farm on the palm-fringed Dibango River in Cameroon. The surface churns with red tilapia he hopes will help curb his country's dependence on frozen imports.
When you see the red here, it's a bit like the red sea bream that you find at the market. But these are red tilapias. After my studies, I did a lot of research on the red tilapia and I realized it could adapt to local waters. So I received permission from the government to introduce the species here. So today I finished my training in order to open the lab to produce the red YY tilapia in Cameroon. We'll also be able to export to neighboring countries. So here we have the red and grey tilapias. It's the same species, just a different color. We grow this fish for consumption. Everything you see here, people will buy.
Kamgo traveled to China, the Netherlands and Vietnam to learn how to raise red tilapia and pangasus native to Asia that he realized could thrive in Central African waters.
With this, I think we can conquer the market. As fillet, it exports a lot. America buys a lot of it, and Europe as well. And now we need to develop a fish that will feed us and earn money.
Kamgo is also eager to share his expertise with peers in Cameroon and elsewhere on the continent. He trains students how to breed fish at his company's laboratory outside the commercial capital Douala and sells juvenile fish locally as well as to farmers in neighboring Gabon and the Democratic Republic of Congo.
We train our students here. This is a system I put together with retrieved local materials to train my students to produce the fish. Because where I trained, the technology is more advanced, we can't find that material here. So I decided to make a local system that can train the people, enabling them to recreate it on their own.
Kamgo's AgroWorld group sells 23 tons of fish per month. Although market dominance is a distant dream, fish farming is on the rise across Cameroon with over 10,000 tons produced in 2020 compared with 5,000 tons in 2018. This is according to the head of the aquaculture at the Fisheries Ministry in the country. To support the country's 15,000 fish farmers, the government has introduced import bans or limits on certain species including the red tilapia. As of 2021, it has also removed all custom duties on imports of aquaculture equipment to encourage the sector to scale up. Beryl Oro, CGTN.
A taxi app developed in the Democratic Republic of Congo is being used to help protect people from assault and kidnapping when traveling. The app is called Hoja. It was developed by a pair of entrepreneurs who wanted to find a way for people to get around without fear of being attacked by criminals posing as drivers. CGTN's Chris Ochamringa reports from the metropolis of Kinshasa.
For Coralie Level, traveling by taxi is the most convenient way of getting around the city of Kinshasa. But hailing a catch, as these cabs are known, can be risky. The capital has seen a rise in people posing as drivers who have been kidnapping passengers for ransom since 2018. It's led campaigners to develop a new app called Hoja to allow safer ways to hail a taxi, and it's come as a big relief to many residents.
Avant Hoja, j'ai redouté les enlèvements. Before this app was introduced in 2020, I feared travelling in these taxis because there were many cases of kidnappings. People I knew got kidnapped. There was no way of knowing whether the taxis were safe.
Magali Boyasadia and a friend of hers are the brains behind this taxi app.
After witnessing so many relatives and close friends being victims of kidnapping, we just couldn't look away. And the fact that around 90% of the victims were women made us feel particularly targeted. So it became a mission to actually find a solution which would allow any citizen in Kinshasa to actually be able to check a taxi before actually deciding whether or not to embark on it.
Details of the owner of the taxi and the driver are all recorded in a database which can be accessed by passengers who've downloaded the app on their smartphones. The Hoja app also has a GPS system that tracks taxis across the city.
The car can be stopped from a distance, it can be restarted from a distance. Yes, so in case we get an alarm, an SOS or a panic alarm, then immediately we can stop the car.
Authorities in Kinshasa say the app has made a huge difference in the security of passengers.
We have not recorded a single case of kidnapping in taxis ever since we partnered with the app designers in January this year.
The Hoja taxi app has also helped city authorities identify and control the flow of transport in this big city of 15 million people.
All a passenger needs to do to ensure that the taxi is safe is to scan the license plate of the car, and voila, all the information of the car owner and driver pops up. The designers of this app have also catered for people who use older basic phones. Messages can be sent to those phones to ensure that Kinshasa residents enjoy safe travels in the city. Chris Ochamringa, CGTN, Kinshasa, Democratic Republic of Congo.
And now for a final markets update, let's now look at forex trade. It was a rather uneventful day for most of the currencies we track here. There was virtually no movement for the Kenya shilling, which remained flat at 107.95 against the greenback. Egypt's pound is slightly weaker, but not so much that it would cause any alarm. It's South Africa's rand, which took another beating today. It's down close to 1.4%, trading at 14 rands and 41 cents to the dollar. Well, that's it for this edition of Global Business. Remember that you can send your feedback to the contacts on the screen and follow us on digital media platforms. From me, Hannah Viviers, and the rest of the Global Business Africa team, thank you so much for watching. We'll see you again next time.